Hey everyone, and welcome back to the channel where we demystify the markets and explore what makes certain stocks stick. Today, we're diving deep into a fascinating situation for a company you might not have heard of, but one that's flashing some serious signals on our hard-to-borrow screener, Big Tree Cloud Holdings Limited, ticker symbol DSY. Get ready because the numbers here are quite astonishing. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, who is DSY, Big Tree Cloud Holdings Limited? They operate in the consumer defensive sector, specifically in household and personal products. This company manufactures and sells everyday essentials like sanitary napkins, panty liners, and sanitary pants under brand names such as Big Tree Cloud and Yaliota. With a current market cap of just $20.01 million, DSY is a small player, but is certainly making some big waves. Let's look at the price action. Over the last 30 days, DSY has surged an incredible 123.81%. In the past 5 days alone, it's up a robust 46.87%. Today, however, we've seen a pullback with the stock down 7.84%. Now, let's talk volume. Today's volume for DSY was a mere 78,600 shares, which is dramatically lower than its 30-day average volume of nearly 5.8 million shares. This Xerox relative volume means trading activity was almost non-existent today compared to its recent historical average, which is an important detail to keep in mind when evaluating today's price drop. What is cost to borrow and why it matters? Before we get into DSY's specific situation, let's quickly cover what cost to borrow means. Imagine you want to short a stock. To do that, you first need to borrow shares from someone who owns them. The cost to borrow, or CTB, is essentially the interest rate you pay daily to rent those shares. Think of it like renting a car. The more in demand the car, or the fewer available cars there are, the higher the daily rental fee. When a stock's CTB starts soaring, it's a huge signal that something unusual is happening. Either there's massive demand from short sellers, or the supply of shares available to borrow is extremely tight, or both. And yes, these fees can easily exceed 100% on an annualized basis because they compound daily, making it incredibly expensive for short sellers to maintain their positions. Why this stock is hard to borrow right now. Now let's apply that to DSY. Our hard to borrow screener flagged DSY for a reason, and it's a big one. The annualized cost to borrow fee for DSY currently stands at an eye-watering 763.7%. Highlight 763.7%. This isn't a typo. What's more, this fee has seen significant momentum, jumping by 34 percentage points over just the last 5 trading days. And why is it so high? Because the supply of shares available to borrow is incredibly scarce. As of today, there are only 3,000 shares of DSY available to borrow. Highlight 3,000 when you consider DSY estimated float is around 1.3 million shares. Having only 3,000 shares available is an incredibly tight supply. Our internal composite squeeze score, which combines factors like CTB, borrow supply, and price momentum, currently places DSY at 48.9 out of 100, indicating a noteworthy situation. Squeeze mechanics explained. So, what does it mean when a stock is hard to borrow? It means lenders are demanding extreme premiums because shares are either scarce or perceived as very risky to lend out. When short sellers are paying over 700% annualized to hold their positions, they are under immense pressure. If the supply of shares dwindles further, or if lenders decide to call back their shares, short sellers are forced to buy shares back in the open market to close their positions. This act of buying, especially if many short sellers are forced to do it simultaneously, creates sudden, intense buying pressure. This buying pressure drives the stock price up, which can then trigger even more short sellers to cover, leading to a rapid, explosive price increase known as a short squeeze. However, it's crucial to understand, a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have very strong conviction in a bearish thesis and are willing to pay those exorbitant fees, believing the stock will eventually collapse. Dilution risk check. One critical factor to consider when evaluating any potential short squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide easy cover for short sellers, essentially adding supply to the market and making it much harder for a short squeeze to take hold, even if the cost to borrow is sky high. In our check for DSY, we found no recent diluted SEC filings such as -1s, -3s, or 424 BS in the last 90 days. Furthermore, there have been no recent reverse splits for DSY in our look-back window. This is a positive sign for any potential squeeze thesis, as a lack of recent dilution means fewer new shares are likely to hit the market and undermine the scarcity factor. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For DSY, given its unique characteristics, here's what we'll be watching closely. First, keep an eye on the available shares to borrow. With only 3,000 shares currently, any further reduction could amplify the pressure. Second, continue to monitor the cost to borrow fee. Any further sharp increases would indicate escalating demand to short or increasing scarcity. Third, volume. Remember, today's volume was incredibly low. Show volume charts significant return to average or higher trading volume, especially on upward price momentum, could act as a catalyst. Finally, watch DSY price action relative to its recent massive gains. Can it hold those levels or push higher? DSY, Big Tree Cloud Holdings Limited, presents an incredibly interesting case study with its astonishing 763.7% cost to borrow fee and only 3,000 shares available to short, all against the backdrop of a tiny market cap and recent triple-digit percentage gains. While high CTB is not a guarantee of a squeeze, it certainly flags DSY as a stock where short sellers are facing extreme costs. This situation highlights the fascinating high-stakes game played in the market's hard-to-borrow segment. Always remember to conduct your own thorough due diligence. If you found this breakdown valuable, please hit that like button, subscribe for more in-depth analyses, and let us know your thoughts and questions about DSY in the comments below.